Can we start? Thank you very much. Thank you. Okay, guys, welcome once again. Financial statements. This occupies a larger share of our exam. You'll see by the time when you write exam, most questions will be based on the financial statements, and the financial statements are having a larger share, if I may say so, for the final examination. So I just want us to maybe quickly go through this unit. I'll just start by explaining the basics, because we cannot just take exercise. I believe that if we can get into the basics, by the time when we solve our practical exercises, we will be having an idea of what is going on. Before I can continue, if I may ask, I think you still remember from our previous semester, we did have 5 groups of accounts. Do you still remember those groups of accounts? Like when we identified, especially under account equation, we normally classify accounts according to certain groups. Can you quickly maybe mention those groups before I can continue? Anyone? Those are the subsidiary journals. I'm referring to the accounts. For example, if I say debtors control, you must know how to classify it and say debtors control falls under this group. We can call them classifications. We can call them elements of financial statement. Thank you very much. Assets, yes, I agree. What else? Liabilities, I agree. Yes. Yes. Drawings is under liabilities. Expenses, yes. Capital still under owner's equities. Yes, in a nutshell, guys, obviously we have got assets, owner's equities, liabilities, incomes, and expenses. Now it's time for us to be able to group those groups according to their nature. As you can see, our topic is based on financial statements. Remember, everything started from the transaction, if you remember the accounting cycle. So why do we have accounting? It's because we need to summarize those transactions so that at the end of the day, we can produce reports. If you can recall very well from our previous units, we normally say we prepare financial statements for what we call users. You still remember users of financial statements? For example, we've got managers. Yes, we've got managers. We've got SARS as one of the users. So at the end of the day, those users, yes, even the bank, those users, we need to report to them. Obviously, we need to report on our financial performance. To know that our business is performing, we either see profit or loss. So if you can check here, we have got the statement of profit and loss. As you can see here, the statement of profit and loss is where we determine whether we made profit or loss. So it's where we check our financial performance. So the reason why we know that our company or our business is performing is because we can see whether we're making profit or loss. But performance at the end of the day will determine whether we have got a good financial position or not. So that's why when they ask you questions sometimes, they need to give you the financial performance, especially for your assignment. They gave you the financial performance of the business. They gave you the profit you made for that particular business. So when you perform, it means you will end up having a good financial position. It's like you as an individual, if you don't work hard during the year, so at the end of the year, you will struggle when it comes to your financial position. That's why we talk about the liquidity. The liquidity is all about what? The current assets that you have on hand in order for you to be able to finance your short-term expenses and liabilities. So in a nutshell, we need to compile a statement which will show us the financial performance. If we've got a financial performance, a good one, it means this will result in what? In financial position. So in a nutshell, the statement of profit and loss is the same as the income statement. It's just that with the new standards, instead of calling it income statement, they call it what? Statement of financial, of what? Of profit and loss or financial performance. The statement of financial position is formally known as balance sheet. Don't be confused and say, where are we getting this statement? So it's where we check the financial status of the business. And again, remember that before you start the business, from our accounting 1A, we learned that we need to contribute capital to the business. Whatever you have contributed in the business, in most cases, you don't normally end with what you contribute. So when we talk about the statement of changes in equity, here we're going to check the movement around capital. So it means if we started with a capital of 1 million, how much will be the capital at the end of the period? Again, if you check for your assignment, they did ask you for the statement of changes in equity. So the statement of changes in equity can be affected by the following. Obviously, as I said, all about the capital. So normally we've got the capital at the beginning. During the period, you will maybe sometimes have an additional contribution. That will increase your capital. Again, during the period, you can either make profit or loss. That profit will increase the capital. But if you make a loss, that capital will decrease. But it will make sense by the time you take an exercise. And again, during the period, sometimes the owner takes what belongs to the business for own use. I think you remember that. For example, drawings. And again, drawings is going to affect the statement of changes in equity. In a nutshell, these are the statements which we are going to focus on when it comes to our unit. Do you have any questions so far, guys, about the explanation of the financial statements? Any questions? Okay, thank you very much. Now, you realize that, sometimes, I think by now you know that we normally talk about, I think if you remember even from the previous week, I said from now on, when you see an exercise, you must come up with what we call the accounting period. I think you're not surprised, guys, for me to draw this. I just want to draw this. I think today at least is better because last week when I was drawing, everything was skewed. Okay, but yes. So obviously, let's talk about, okay, I want you to remember I told you about referring to revision exercise 6 in your textbook. Unfortunately, I forgot my book, but I think you will help me with this one. So I want you to go to that revision exercise on page 244 of your textbook. I hope you all have the textbooks. I want you to go and identify the accounting period for that particular business, because I'm going to use this exercise to give you like the basics. Remember today, guys, even if we cannot finish this section is very long, so we cannot finish this section. But I just want to give you the basics so that by the time when we go through the practical exercises, everything makes sense. Please do me a favor. Go to page 244. Check revision question 6, learning unit number 4. Please tell me about the accounting period. We normally find the end period under the requirements, the required part for that section. Please go and find it for me. And tell me, what is the end period for that business? 30 April, which year? Yes, it starts from 244, it ends on 245. 30 April, please make sure that you see that, 2019. This is important. This is our end period. Yes, this is our end period, guys. So, if this is our end period, it means we started somewhere. Remember, we need to have 12 months. When did we start this period? It's going to be, yes, 1st of May, 2018. Yes, this is very much important because otherwise our figures are going to be incorrect. The reason why I'm using this timeline is because I'm going to show you what we call adjustments. Okay, let me just put it here. We've got what we call adjustments. And sometimes we call adjustments, we call them additional information. Who can tell me? If I say, please adjust something, what do I mean? Let's say you're playing the music, I say, please adjust the volume. What will you do?
Reduce or increase.
Reduce or increase.
Increase.
So when we say adjustment, it depends. So it's either we increase or we decrease.
Decrease.
So the reason why they will always give you the adjustments is because when they give you the list of balances, can you see on that page 244 and 245, they gave you a trial balance. Can you all see that?
Yes.
And then again, they gave you additional information in the form of adjustments. Are we together?
Yes.
So it means some of the balances there are still to be adjusted. Some of them will be increased, some of them will be decreased. Meaning before you can compile your financial statements, you need to use that information to adjust their statements. Are we together? So, but before we can go to that exercise, I want us to go through the theoretical part of adjustments. And I'm going to use the rent income as an example. Or the rent, let me just say rent expense for now. Let's say, for example, we've got the rent expense of how much? Let's say 10,000 per month. I'm just giving an example. So it means you are paying rent for 10,000 per month. Remember, we report at the end of the period, meaning here, 30th of April 2019. So when we report, we expect to have figures for how many months? 12 months. Let's say we are dealing with 12 months, because if you can count here, we have got 12 months. So let's say, for example, somewhere here, let's say here we have got, this is our 11 months. Just give you an example here. Let's say here, we've got 11 months. This, how much will be the amount for 11 months? Find the amount, 11 times 10,000. Use the calculator. $110,000. Are we all okay? Still here? Yes, 110,000. Thank you. I think the system is a little bit slow. It means for 11 months, we are going to have how many months? We're going to have how much? 110,000. But we know that we cannot close the books with 11 months. We need to close the books with 12 months. So it means 1 month is still to be paid. It means still to be paid. Sometimes they can still say outstanding. Sometimes they can call it due. Sometimes they can call it in arrears. So in accounting, we cannot close the books with 11 months. We need to add that extra month, which is how many months? Which is what? 1 month. Okay? So it means this 1 month, it is still outstanding. So we need to make sure that we show this in our books, even though we still have to pay it. So I'll do this. This is called outstanding amount. So can you see that this amount is still to be paid, but we need to add so that at the end we can have how many months? 12 months. So how much do you think we're going to add for that particular 1 month? we're going to add here, for example, we're going to add 10,000. So meaning in the books of account, we're going to have how much all in all? We're going to have 120,000. So this amount of 10,000 is called accrued. Because the expense is still to be paid. I hope you understand me. So when they ask you for general in most cases, they want you to deal with the adjustment, the additional information. In this case, 10,000 is our adjustment. As you can see, I added 110,000. Normally, this 110,000 will be part of the list of balances from what? The trial balance. Is everyone on the same page so far?
Yes.
Thank you very much. But we need to classify this. Who can tell me? How can you classify these accrued expenses? According to 5.
I think it's a liability.
Which one? Long term or short term?
Short term.
Short term. So it will always be classified as what?
As a liability.
Yes, because when we go to the financial statements, we need to know whether to record it under the current liabilities or non-current liabilities. Are we together so far? Okay, when you say current liabilities, under which side are we going to record this? Debit or credit?
Liability would be, I think, credit.
Credit. Any questions so far, guys? Remember, I'm just to give you the basics. But here I was just giving you an example about the rent expense. Any question, guys? Can I continue?
Yes, you may.
No problem. Now, I just gave you an example about the rent expense. Even if you were receiving this rent, yes, I can see an echo on the other side. Yeah, so maybe, yeah. Okay. I think I can continue. I think it's better now. Can I move on, guys? Thank you very much. No problem. Now, as I was saying, I was giving an example about the rent expense. It doesn't matter even if you are the one who was receiving this rent. It means it will be a rent income to you. The same applies to the rent income. Let's say this information was about the rent income. Again, the same principles would come into effect. So any rent income that you still have to receive will be called accrued income. Can you see now? You just have to be careful when you read the information, whether you are the one who's paying or the one who's receiving. Okay. So again, yes, the accruals. Yes, I think in a workplace you normally call that accrual. But how can you classify this for me? Please help me. Because we classified accrued expense, we can classify what? Accrued income. Please try. Yes, it is asset, but which one? Current asset. Very much. But debit or credit? I'm telling you, thank you very much. I'm telling you, this is going to help you. This is going to help you very much because without understanding, this can be difficult. So far, we've got two adjustments. We have got accrued expenses and accrued income. Guys, if you can check my notes, not now or my slides, I put comprehensive income there, but because of this lesson, I cannot use my slides for now. So at your own spare time, go and check my slides. I even tried to give you some examples, and some of them are a little bit challenging, guys, but it's okay. But let's focus on this slide. You will realize that this is going to be very, very useful. Now, let me give an example about the rent expense again. Let's say, for example, the rent expense is still , but they are telling you from the list of balances, they say the rent income for the year that they gave you for that particular trial balance, they say is 130,000. I'm just giving an example. Let's say the total rent expense for this particular year is 130,000 for the year. That is the total, as you can see. But they are asking you to compile financial statements. But because you know that your rent expense is 10,000, you must just check how much was supposed to be the rent for the whole year. If I may ask, how much was supposed to be the rent for this particular year all in all? Someone please try. You are supposed to be 120. But by the look of things, you see that you have got 130, meaning the extra 10,000 has been paid in advance. So, but remember, in the books of accounts, we can only use the expense for this year only. So it means we have to come and deduct how much? 10,000, so that we can remain with what? 120,000. So 120,000, yes, I agree with you. The 120,000 is the amount that must be used to calculate the profit for this year. But as you indicated, guys, already here, let me just put a line here. So this 10,000 is classified as, like you said here, you said is what? Prepaid expenses. Okay, guys, prepaid expenses. Let me just go back there. Okay, so this will be our prepaid expenses. Who can classify this for me, please? No, remember, think about your prepaid airtime that you have now. So if you have prepaid airtime in your pocket now, what is it to you now? For now, is still what? Current asset. Because you still have to enjoy the benefit of using that particular asset. So, meaning Vodacom or MTN is still owing you. But the minute you use airtime, it means it will become what? Expense. And obviously, how can I classify this? I know it's just a matter of formality, but I enjoy it if you tell me. David, you're great. Thank you very much. This is important. Okay. So it means, again, you can pay in advance. When you pay in advance, that money still belongs to you because you still have to enjoy the benefits. Again, guys, even if you are someone who was receiving this rent and someone else pays you in advance, again, who can tell me what account are we going to have here? If someone paid us in advance, because here we are the ones who paid in advance. So what will be the account? Be specific before we can classify income received in advance, or sometimes you can still call it what? Prepaid income or income received in advance. Yeah. So you have got a choice here, but you either use prepaid income or income received in advance. So how can you classify this for me? Thank you very much. Current liability. Obviously, debit or credit. It's a formality, I know now. I think you even feel bored now. You feel demoted. It's okay. It's part of our lives now. As long as it's easy, it means we understand. Okay. I think so far, guys, you can see how many adjustments do I have? I've got 4 of them. Please keep this information safe. Yes, I did give you some of the information on my slide. Okay. Now, as you can see, accrued are added, prepaid are deducted. I repeat, accrued we add, or accruals we add, and prepaid we deduct. Now, let me go to the next adjustment because I want to talk about this adjustment so that you cannot be confused in the future. Now, you know that sometimes that's why most companies don't prefer to sell on credit. Why? Because there's a risk of what? Bad debts. So I think you all remember bad debts, but now we're using a term. What is another term for bad debts? You can try. If I don't want to say bad debts, I can call it. Okay, I'm talking about when you are selling goods on credit, there's a risk of bad debt. Some debtors will end up not paying you. Yes, debtors obviously are the people who owe you, but if they don't pay you and they disappear, sometimes you write them off. Yes, so you can either call them bad debts or thank you very much, or credit what? Losses. Just for formality, how can you classify this to us? What are the credit losses to us? Remember, we learned this from the accounting 1A. Can you hear me now, guys? I don't know whether it's my connection, but or what, but yeah. Okay, thank you very much. So, thank you. How can you classify the credit losses for me? Groups of accounts? Are they assets? Expenses. Thank you very much. Expenses, and obviously debit or credit? Thank you very much. Remember, guys, I'm just checking. No, don't feel bored. If you feel like it's easy, guys, we're just trying to get the basics right once again. Okay. Now, because you know that as long as you sell goods on credit, there's a risk of bad debts. Sometimes we provide for those bad debts. Previously, according to the old ways of dealing with this account, we used to call that provision for bad debts. But now we call them, when you provide for the bad debts, we call them, we can try before I write it down for you. Yes, we are going to have allowances for credit losses. So this means you provide for what? For bad debts, because you know that there's a possibility that these people will disappear. So if you write off the debtor, this affects your business. To avoid seizing your business at all, so you must make sure that you provide for this. How can you classify this to me according to the groups of accounts? Try to classify for me. Thank you very much. It's a negative asset. And obviously, debit or credit in more, just the normal way of dealing with it. Is it a credit or obviously it's a negative asset? It must be the opposite of an asset. Which side? Debit or credit? Thank you very much. Yes, I hope everyone is following here. Any questions, guys? No problem. Thank you very much, guys. Now, sometimes, let's say you provided for bad debts or we have got allowances for credit losses. Sometimes you can reduce it. Sometimes you think that maybe you put too much bad debts, maybe you want to reduce it, maybe from 100 to 80. But sometimes you realize maybe you have got less, maybe you adjust it from 100 to 120. So that will introduce another account if you do that. That account is called allowances for credit losses adjustments for adjustment. So you will see that. Okay, I was saying, let's say, for example, we have got an existing allowances for credit losses of 100 Rand. But you realize that no, man, this 100 Rand is not enough. as an allowance. You increase it to 150, meaning you increased 100 by 150 by 50 to make it what 150. So it means you adjusted 100 to become 150. So that adjustment of 50 rand is called allowances for credit losses adjustment. Are we together? Or can I explain again? But I'll give you a practical exercise thereafter. So it means an adjustment, remember, it depends whether you are increasing or decreasing. So how can you classify the credit losses adjustment for me? The allowances for losses adjustment to me, according to the 5 groups. Try. Negative asset will be the allowances for credit losses. This one can either be expense or income. It will be called an expense if you have to increase the allowances. But if you have to decrease the allowances, it's like favorable to the business, it will become an income. That's why you will see by the time when we go through the statement of profit or loss and other comprehensive income, you sometimes find allowances for credit losses adjustment expenses, but sometimes you find it under incomes. Is because based on your comparison of the existing and the new one, the adjustment was either an increase or decrease. Are we together, guys? Thank you very much for that. Thank you very much for that. So again, when you classify, obviously, if I can say classify it, okay, which side? It can either be debit or credit. So if it's an expense, it will be debited. If it's an income, it will be credited. As I said, guys, it will make sense when you go through the exercise. I hope so far so good. I continue now. Thank you very much. Now, let me give you another adjustment. Remember here, I'm just talking about the theory, guys. Don't worry and say, why are we not using the calculator? Guys, I believe in a foundation. Eh? That's why when we build houses, we don't sleep before we build the house. We build the house first before we sleep. I think we're all good. Okay. Okay, guys. Okay. Now, sometimes we grant our customers discounts. I like that we build the foundation before we build the house. Yes, I think that is a process. Thank you very much. Now, I was saying that we sleep, and after sleeping, we can go to work. Okay, now that was a commercial break, by the way. Yes, let's go back to to the other explanation that I wanna talk about. Now, sometimes we grant our debtors discounts. Sometimes when you grant them discount, you encourage them to pay according to the terms of payments. Customers sometimes, they forget about you because now they've got what they bought from you. So now you need to keep giving them discounts. If you pay within this month, you get this one back. So again, as a business, we need to provide for those discounts. Those are the future commitments. So we need to take money, put it aside for those circumstances. When we put that money aside, again, we're going to call it allowances for settlements. Discount granted. Are we together? Yes. Remember, debtors allowances definitely. Debtors allowances is the same as the sales return. So if you say debtors allowances, it's going to be sales return. Here we're talking about providing for the future discount. So the account that we need to initiate is classified as what? It's called allowances for settlement discount granted. Again, it works like the allowances for credit losses. classify it to me, guys? Thank you. Please help me. Okay, I was saying, how can you classify these allowances for settlement account for me? Is it an asset, owner's equity, liability, expense, income? I don't know whether our system is too slow or not. Okay, no, guys, it's gonna be like the first one, which is going to be negative assets. Okay, and again, you're gonna what? Credit. So it works like what? You provided. It works like the for credit loss, the allowances for credit loss. But yes, you did say expense, guys. Remember, again, for these allowances, they can ask you to adjust it, either to increase it or increase it. So we need to have another account for that. But remember, when we dealt with the allowances for credit losses, we said when we adjust, we are going to have a new account called allowances for credit losses adjustment. But we are not allowed to say allowances for settlement discount adjustment. Instead, we must go and affect sales. So it will depend. If you have to increase the allowance, it means the sales will decrease with that amount. But if you have to decrease the allowance, meaning the sales will increase with that adjustment. But still, the way we find the adjustment is going to be the same way as we find the adjustment under what? The allowances for credit losses adjustment. So don't be confused, guys. The adjustment, let me just settlement discount granted adjustment must affect sales. This is what I'm trying to say. Again, remember, how can you classify sales to me? Just help me with the sales. How can you classify sales from our past experience? Sales are incomes. But again, guys, it will depend on the adjustment. If you had to increase the adjustment, it means you will decrease the sales. So again, here you either debit or credit, depending on whether you have increased or decreased. Please, guys, ask me a question, especially on this allowance for credit losses, for settlement discount granted, and the sales. Don't confuse the two, because if you're not careful, you will say, because on top I set allowances for credit losses, and thereafter I set allowances for credit losses adjustment, the same thing would apply on this one. No. On this one, you must go and affect the sales. Is everyone on the same page, guys? Thank you very much for that. I hope everyone is following. Remember, don't worry, guys, I'm finishing this theory, but I want to cover the theory so that you cannot be confused in the future. Okay. Thank you very much for that. Now, let me talk about something else, which is not new. The other adjustment that we're going to talk about is this one. This is not new to you. I think you remember this one very well. Just to remind ourselves, what is this to us? I guess our system is too slow here. You can't see the depreciation. I'm just saying the. Let me just change it a bit. Let me put it somewhere there. If I put it here, can you see this depreciation? Can you all see the depreciation? What's happening here? Because I can see it from my side. Yo, what's happening here? Technology is dealing with us. Okay, let me just try to squeeze it here. Can you see it now? Can you see it now? I'm not sure what's going on now. I'm not sure, but please just write it from your side. I'm writing depreciation here, and the depreciation is an expense. Okay, let me try another color, as you said. Can you see that? I used another color under prepaid. Yeah, system failure, guys, for now. No problem, guys. But for now, just write it down, guys, so that we cannot waste time. I wrote depreciation. Yeah, it's okay. And now I think it's the system-wise, guys. I'm sorry about that. But now, from my side, I can see that I wrote depreciation, and we all know that depreciation is an expense to us. And this depreciation will increase under which side? On the debit side. So this is what we learned the previous week when we were depreciating. So nothing has changed. But again, depreciation is part of our adjustments. Did you get me on that one, guys? Thank you very much. Yeah, I think the system failure, because even your comments, guys, I think your messages are very slow to come to me. But it's okay for now. Let's talk about it. I want to talk about something else. You know that we have got things we are called consumables in a business. For example, we've got stationery. Can you see this now? Okay. We have got, yes, thank you very much. Now, we have got stationery. Let me talk about the stationery. Stationery. How can you classify stationery to me? Expense, I agree. And obviously, under which side? Just formality. We normally put it on the debit side. Now, you will see that when we have stationery at the beginning, we call it stationery on hand. And during the year, we use some of the stationery. The stationery that we have used or bought during the year is classified as an expense. By saying stationery on this one, where I said debit expense, it means this stationery is either bought or used. So at the end of our period, like in our case, in this case, our period is the 30th of April, ended on the 30th of April, 2019. So if you've got any stationery at the end of the period, this stationery will be called stationery on hand. Don't worry, the question will tell you. So the stationery on hand differs from what? The stationery. Who can tell me, how can you classify the stationery on hand? Thank you very much. Current asset. And obviously, it will be what? Debit or credit? Debit. Thank you very much for that. You need to know. So you need to be careful. Yes, even next time they can give you packaging material. So packaging material on its own is an expense, meaning the one that we bought and the one that we've used. But if they say packaging material on hand, printing on hand, fuel on hand, those will always be classified as what? Current assets. But together, when I say together, I'm referring to stationery on hand, packing material on hand, printing on hand. When you put them together, we call them what? Consumable stores on hand. I don't know if you understand me. So meaning stationery on hand is part of what? Consumable stores on hand. So you will see by the time when we go to the notes to the financial statement, there's a note called consumable stores on hand. It means it's where we're going to put all the stationery on hand, packaging material on hand, etc., etc. And again, as I said, obviously, because on hand, as I said, they are current assets. Meaning together, again, will be called current assets. And obviously, we're going to any questions, guys? Thank you very much for that. So I think we touched a bit of what we wanted to touch, guys. Any question, guys, about the theory before we can take some few, adjustments there and there? Can I continue the next one? So this is the theory that I want us to have before we can take an exercise. No problem, guys. So now I want to share another blank, or can I just clear this information on the, obviously it's recorded. Can I clear it for now? Thank you very much, guys. I cleared. Now, guys, I want you to go to the exercise that I referred you to. Let me just quickly write it for you so that they can be able to. This exercise is the revision exercise, revision question 6 on page, I think it's 245, 244. I think you can see that. Thank you very much. I want you to focus on that, guys, so that we can talk about it. And I know that the exercise needs you to compile the statements and the notes. So what I'm going to focus on now, I'm going to focus on the adjustments themselves, because I was talking about the adjustment, so that we can have an idea of what's going on. And then at a later stage, guys, even next week, and again, I'll check with you during this course, maybe one of the days during the week, maybe we can take 1 hour. I don't mind. If I'm free, you are free. Maybe we take 1 hour. We don't have to stick to Monday only. So if we can be free some of the days, I won't mind. 1 hour is better than nothing. What do you think about that? Let's say Friday before you go to a party, 1 hour. What do you think about that, guys? No problem. We can talk about it. Don't worry, we can talk about that. So I'm just saying, not Friday. Yeah, I understand. Friday sometimes we'll turn up like a bit. So it's okay. Thursday, okay. Tired, I understand. Okay, no, Wednesday can work for me. But no, don't worry, guys. Let's not worry about this. We can just talk about it. Don't worry. Don't worry. Now let's focus on this question, guys. And remember our accounting period. I think you still have the accounting period in your mind, okay? Or do you want me to draw it again for you? Okay, we'll talk about it. Do you want me to draw the accounting period for you again, or will you remember the accounting period? Oh, it's okay, no problem. Now, I want you to read the first adjustment for me. Just analyze it for me. Yes, I'm sorry, I don't know what happened to me. I can't see my book now, but I think if someone can maybe just try to analyze it for us, the first information. The first one is depreciation. Okay, no problem. Obviously, they want us to depreciate an asset. Okay, 18% motor vehicles. Did they say that you bought a new one during the period or what? Okay, no problem. I think I need to have a timeline for this so that others can be able to follow. Just let me write it quickly. Thank you very much. Thank you very much for that. Sorry, guys, I don't know what happened. I had a busy day, so I forgot I don't know. I think I left it on my table. So I'll quickly write this. Thank you very much. Let me just quickly put this. This is where this first problem. Thank you very much for that. For that. Okay, guys. It means we said they bought a new one on the 1st of November, meaning the 1st of November will be somewhere here. No, let me see it. Sorry. Will be somewhere here. 1st of November is here. Is when they bought a new one. No problem. Please give me the balance from the trial balance for the vehicle, all in all. Thank you very much for that, Leah. How much is the balance of the vehicle now? Like, give me the balance of the vehicle. Is thank you for 11817.50. No problem. Now, can you see they said you bought a new one on the 1st of November? It means this balance already includes the new one. So before you can calculate depreciation, you must first deduct the new asset. Yes, it includes the new one. So let's deduct the new asset. You said you bought it for 65,000. How much is the old one without the new one? Just help me with the calculator. Take off 65,000 and check how much is the new one. Not the new one, the old one. Thank you very much. It's 346,817.5. This is the old one. So when we depreciate, we must depreciate them separately. So now we can start our depreciations. Which method you said is which method, diminishing or straight line? Diminishing. Okay, thank you very much. So who can try? Who wants to try? Let's start with the old one first. Obviously, the cost of the old one is 346,817.5. And then how will I depreciate? Who wants to try? Must I just multiply or must I times minus something first? Yeah, the messages are too slow. Okay, just go to the trial balance and find the accumulated because we're using diminishing. How much is the accumulated depreciation on this asset given to us? Is it straight? Please double check. Double check. Some people are saying it's the straight line method. Please double check whether it's a diminishing or straight line. Or on cost, meaning the straight line method. So you must go direct. Just multiply by how many percent? Straight line. Is it 18%? 18%. Thank you very much. Meaning 18 over 100. How many months? The old one. How many months? 12 over 12. Tell me how much is the depreciation for the old one? Six, 2, 4, 2, 7. Thank you very much for that. Yes, this is the depreciation for the old one. So now we must calculate for the new one. The new one was bought for 65,000. Multiply by how many percent? Obviously, it's 18%. 18 over 100 or 18%. And how many months? November to 30th of April. November, December, January, February, March, April. You said how many months? Definitely, you said 6 months. Times 6 divided by 12. How much did you get? $5,850. This is the one for the new one. So now you are gonna go and affect what? If they ask you for the general journal, let me just show you, because they can ask you for the general journal. This is how you need to do it. Just let me quickly do this. If they ask you for the GPA, I'm gonna have something like this. Okay. Let's say this is the general journal. So here you're gonna have debit. You're gonna have it. Okay. So obviously you must come. What are the two accounts for this? Who can try it? Because we need to record these two depreciations together. So it means we need to have, yes, depreciation, and the other one, accumulated. So which one are you gonna debit? Yes, you're gonna debit what? Depreciation. How much is the total of the two depreciations, please? You're gonna credit accumulated depreciation. You must say 62,424.15 plus 5,850. Uh, 68277.15. So I think I wrote it on the wrong side. So this must come here. I'm just saying if they ask you, because they can ask you. And then obviously here you must come and put it here. I'm just saying, guys, if they ask you for general. So it's the same thing that we did the previous semester. So this is how you need to show it in your general. But in your case, it's you need to go and put this in your financial statements. But we still have to go and analyze these financial statements. But for now, don't worry about the financial statements. I want us to talk about the adjustments for now. Are you okay with the depreciation, guys? Okay, the next one. Please help me with the next one. Sorry, guys. I won't forget again. I forgot the book, man. Sorry. I've got a 1A instead of 1B. It's useless to me now. What is the next one? Okay, we still have, which methods are we using? Okay, I thought we only had one asset, so it's okay. We can still separate them. Reducing balance methods. Okay, please go and find the, this is the finisher one. Go and find the balance for me. Thank you. Okay, diminishing balance method, meaning we must first minus accumulated. Find the accumulated for us. The accumulated depreciation for us. Thank you. How much you get after minusing? Or you can just do everything in brackets, doesn't matter. Thank you very much for that. Is then that we can multiply this by how many percent? You said 60%. How many months? 12 over 12. And how much you get? I assume that we didn't buy anything new. So this is our depreciation on what? On the furniture. So it's going to be recorded the same way as the one that we just recorded. But no, you can even put them together. Like instead of separating them, you can just say depreciation and thereafter put accumulated depreciation of both assets at the bottom and you add them together and the total will be for depreciation. But yes, you are still allowed to separate them as depreciation for the vehicle first and thereafter depreciation forward for furniture thereafter. So any questions so far about the depreciation, guys? Is everyone following, guys? Some people are quiet. Are you all here, guys? I'm worried about others. Is it too much? Are you cooking? Okay, problem. Lost. Where, my sister? Where can I help you? Where with regard to? My sister, you say you are lost. Where can I explain? What can I explain? Anything specific? Okay, guys. The next question, because I can see I don't get response from my sister there. Let's try the next adjustment, please. Yo, it seems as if I lost everyone. Let me know, guys, if you are still together here. Data gone insolvent. Well, for now, I'm just analyzing, guys. Don't say, because I can see maybe some of you think, okay, this thing does not answer the assignment. No, you need to get the basics right before you can go and answer the assignment. So I want you to understand this. It's not all about the assignment, even the exam is there. Okay. Okay, declared insolvent. Thank you very much. So what happened? Must we write off the whole amount, or did we manage to get some from him? A debtor owed one. Okay, we received 25 cents in every rent. Thank you very much. So this means a debtor owed us. Everything must still be recorded. Thank you very much. So a debtor owed us 1853.18, but he managed to pay us only 25 cents. 25 cents is the same as 25%. So we must multiply this by 25% or 25 cents. Just use this. Okay. How much is the 25% of this amount? It is 463.30. Are we okay? So this is the amount received. Who can tell me which accounts will be involved in this? Because we need to know what to affect. This is the amount that we received. So which accounts are we going to affect? No, this one is not written off. This is the one that we managed to receive. So account equation skills, remember, if I received money from debtors, two accounts will be, thank you very much, bank and the other account, debtors control. Thank you very much. So meaning, by the time when we adjust our books, we need to, thank you very much, we need to make sure that we know this account. Okay, just for interest sake, what will I do to the bank? Will I debit the bank or will I credit the bank? The bank will be debited, I agree. And what about the debtors control? Obviously will be credited. I think we are all okay. Thank you very much. Now, if we received 25%, meaning 75% must be written off because this guy is insolvent. So there are two ways of finding 75%. You can say 1853 times 25%, or you can say 185318 minus the amount that you received. You received 463.30. How much is the remainder after receiving? Are we still together? Thank you very much. 1389.88. This must be written off. I agree. Please give me the two accounts. Guys, don't be surprised when it takes time. I think it takes time to receive your messages. I think the system here is failing us. Please give me the two accounts when we write off a data. Thank you very much. The credit losses and no. Who are we writing off? Perfect. Debtors control. Are we together? Okay. So between credit losses and debtors control, which one are we going to debit and which one are we going to credit? It's okay. No, we had for me, I had a long year already. So I can't wait for next year. Because some of the plans were not met here. So I'm just throwing the towel. I'm just joking. But yeah, it's been a long day. We work hard, guys. We work hard. Some people are watching TV now. Now we're studying. But it's good for us. Don't worry. Avoid problems. Okay, guys, let's go back to business. We debit credit losses and we credit debtors control. Thank you very much for that. Remember, guys, we still have to use this information. Yes, thank you very much. I'm still gonna show you the financial statements, but as I said, please be patient. Let's do this analysis first. It will be very useful to us there. I think if I can ask you to put it in your GJ, I think you can be able to do it. Am I wrong? Just want to save time here. Or do you want me to show you how will you put it under the general journal? Will you cope? As long as you know the account debit and account credit, that's all. Thank you very much, guys. Okay, let's try the next one, guys. Allowances for credit losses. I like this one. Yes, okay, two. Okay, thank you very much for the allowances for credit losses. Let's just deal with it now. Let me just put this first so that I'm gonna deal with the allowances. Special case. Okay, and then let me. Okay, now, please give me the existing one, the existing allowance from the list of balances. The existing allowance. 1235.45. Thank you very much. Obviously, the new one, the suggested one, is this one that you just gave me, 786.57. Okay, this means the new one must be 786. The question is, what must we do to the existing one to make it the new one? Must we increase it or decrease it? And with how much? Please help me. The difference. The decrease, yes, I agree. The difference of how much? Please help me with the calculator. 448.88. This is the adjustment that we are looking for. Okay. And then you said it is a decrease. Is it an income or expense? It's an income because we had to decrease. It's like we're getting it back to the business. So can you see? This will help you to record in the books of account. So it becomes an income. So by the time when you compile statement of profit or loss and other comprehensive income, you are going to have allowances for credit losses adjustment under incomes. But let me show you, for this one, let me show you by using like the general journal. Let's say they ask you for the general journal. Let me quickly do this, guys. It won't take me long. Let's say they're asking you for the general journal. Remember, this is debit, this is credit. So, who can tell me which account am I going to debit and which one am I going to credit? If they ask you for general journal for this one. Remember, the two accounts are allowances for credit losses and allowances for credit losses adjustment. So because allowances for credit losses adjustment is an income, will I debit it or credit? I'm going to credit, meaning I'm going to debit. Thank you very much. It means the one that I'm going to debit, let me put it here. Let me just abbreviate allowances for credit losses is the one that I must start with because I need to debit, which is how much? The difference of 448.88. Okay, so I'm going to credit allowances for credit losses, just for space, guys. But adjustment, you must always have the word adjustment, otherwise you will lose marks because it will look the same as the one that you started with. And now you must come here and put 448.88. Can you see that? So can you see if they ask you for the general journal, it's going to look like this. But when you go to your financial statements, this amount of 448 will be under your incomes. But the amount for 786.57 will appear under your statement of financial position under your assets. But I'm still going to show you how to do that because the allowances for credit losses is a negative asset. So it must go to the asset and affect assets negatively. So the existing one does not exist anymore. It has been replaced by the new one, which, as I said, this one will go to the statement of financial position. Okay. And never mind the spelling. Yes, statement of financial position. So, but I'm still going to show you in the financial statements. Guys, are we okay so far? Thank you very much, guys. Please, let's try the next one. Please help me with the information. What is happening? Thank you very much. We recovered in cash from a debtor. So, in other words, a debtor who disappeared, whom previously written off. Thank you very much. Firstly, please just give me the two accounts for this. This one, I think it can be easy. I'm going to write it on top here. Give me the two accounts, please, for this one. I'm going to write on top here. Give me the two accounts involved. Credit losses, but please have the word recovered. Because if we say credit loss, it's like we're writing off. Ne? So just say credit losses recovered. And the other one you said is debtors. No, the next one cannot be debtors. Remember, if we write you off, it means you are not our debtor anymore. So when you come back to us, it's like we're just getting any other income. Thank you very much. We need to have what? Bank. Because if I can write you as a debtor, it means you have been my debtor. Remember, by writing off means we cancelled you. So the two accounts will be credit losses and bank. So what will I do to the bank? Will I debit or credit the bank? Help me. You said bank. Must I debit or credit? I must debit because I'm receiving cash. And obviously I will credit what? Credit losses, because the credit losses recovered are our incomes, guys. So if you put in your GJ, it's gonna look like that. I'm just saying, just to save time. Are you okay so far, guys? Or do you feel like no, this is easy? Do you want me to go directly to the financial statements, or do you want me to analyze further? Okay, thank you very much for that. No problem. Thank you very much. Okay, think about it, guys. Because of the space now, I'm gonna clear everything, and then so that I can have space. Okay, I'm gonna clear now. Can I clear before I continue? Thank you. No problem. Now, please analyze the next one for me, guys. I promise you next time, guys, I'm not gonna bother you about analyzing for me. So just tell me about the information and we talk about it. Telephone and fax not paid. I like this one. Okay, please for now, just think about the two accounts involved. Thank you very much for that, Liam. Give me the two accounts involved. Be specific, what is that expense? Thank you. Telephone and fax. And as you indicated, an expense, no problem. Please give me the other account, because there must be two accounts involved, you know by now. That not paid yet, not yet paid, must give you an account. No, remember, you can't say bank because you did not pay cash. You still have to pay it. Thank you very much. Can you see that? We call this accrued expense. It's enough. It's where this one comes, because the expense is still to be paid. Remember, we classified this as what? Current liability. Will I debit or credit? I will credit. This will help you a lot. And obviously, this one I will have to debit. Together. So how much? I think the amount is given to you, as you said, is 2978. Can you see that? So I think we are covered with this one. Next one, guys. Delivery expenses for me. Thank you very much. Prepaid. Please give me the two accounts. Thank you very much for that. The two accounts for the prepaid one. Thank you. Delivery expenses. And the other account is prepaid expenses. Thank you. Classify prepaid expenses for me. I know I told you before, but let's check if you still remember. What are these to us? Current assets. So if they ask you to record them in the general journal, under which side I'm going to put them? Debit or credit? Debit. Thank you very much. A bit debit, and obviously this one is going to be credit. Thank you very much. Remember, prepaid means the expense in question will have to be deducted. It is more. That's why we have to create the expense. They don't be surprised and say, why do we decrease expense now? It's because it has got prepaid. Remember, I said prepaid, we deduct from the expense in question. Accrued, we add to the expense in question. So you must check that, especially when we go to the financial statement. For you to finish in the exam, whenever you see accrued, go and add. Whenever you see prepaid, go and deduct. But for now, as I said, we're just analyzing the GJ. Okay, let's try the next one, guys. Services income not received. Okay, I will need the two for that. Thank you very much for that. Yeah. Help me with the two accounts. Services income. And what other account do you have? Thank you very much. Because it's still to be received, we have what accrued income. Please, as for accrued income, please classify them for me quickly. They are current assets. And obviously, debit or credit? Yeah. I know it's obvious, debit. So it means the other one will be credit. Thank you very much for that. Can you see, guys? I believe you can know how to put them in the GJ, but obviously in the GJ, the one that you debited must come first, and the one that you created must be the last one to be recorded. Let's try the next one, guys. Rent income for May received already. Can you see they're very clever, these people? They don't even tell you how much. Meaning, okay, Liam, did you find the amount already, or is it the total amount from the list of balances? Is given from the list. Oh, it's given already. Oh, this one is simple. Okay, in the question. So meaning, give me the two accounts for this. Obviously, the first one is rent income. Thank you. Rent. Be specific, guys. Just say rent income. And then the other one, obviously, yes. The next account, prepaid income. And remember, I told you that you can also call it income received in advance. Please classify the prepaid income for me. Johannes, are you still around? current liability. Thank you. And debit or credit? Double check liabilities. Credit. Thank you. And obviously you will have to debit this way. Hope everyone is following, guys. So the amount is given there, yes. Next. Invoice of 1,100 received from VVT from April. Okay. Not yet recorded. Okay, the accounts involved. Electricity, thank you. And then the other one. Now, let's talk about this one. They are very clever. No, there is no, I think, yes, it makes sense, accrued, but the minute they say you have been invoiced, can you see? So you need to ensure that it's a creditor. Yes, it doesn't change the classification, but instead of saying accrued, because they didn't say not yet paid, they just said you received invoice. So instead of saying accrued expense, you need to say what? Yes, even if you say accrued expense, your books will still balance, but the process, they will question your process. Are we together? They will question your process. So it's going to be creators control. And what is it to us? Thank you very much. And obviously it's going to be debit or credit. Thank you very much for that. It means you need this one there. Thank you very much for that. Okay. Yes, please be careful with this. Check the examiner. They like using the word invoice. The minute you see the invoice, guys, just say creditors. Okay. Because they're trying. I know this how they ask sometimes. But even if you say accrued expense, if I was marking, I would definitely use my discretion there. But just remember to say the creditors control. Okay. Next one, guys. $1,400 paid to VVT for delivery. Thank you. Is that all, or any other information? Thank you. Is that all? Or that is a mistake? So they made a mistake. They went to the office refreshment instead of delivery for. No problem. So give me the two accounts because we know where the errors took place. Yes, thank you very much for that. Definitely, yes. Please give me the accounts you think must be identified here. Office refreshments. Okay, railage inwards. Okay, because about what if. Okay, if you check from our back now. Can you hear me now? Thank you very much for that. So my question was, are we using perpetual or periodic? Did they tell you? Even if they didn't tell you that it's perpetual. Okay. If they don't tell you guys, you must look at the following. You need to go to the list of balances. If they did not give you cost of sales as a total, like cost of sales, it means it is periodic. And to show that it's periodic, they should have given you the purchases there. Can you see? If you see the purchases, it means you are using periodic. But if they gave you cost of sales, it means you are using perpetual. Please go and look for me and tell me which system are we using. So if they say purchases, it means we're using what? Periodic. Yes, I will agree with you. Yes, I will agree with you if you say the account will be railage inwards. Remember, railage inwards is the same as the railage on purchases. Don't be confused. Railage inwards means railage on purchases. I hope we understand each other. But let's just talk about what if it was perpetual. Who can tell me what if it was perpetual? Were we supposed to use railage inwards? Okay, let me repeat. Let me repeat for Vuelon. Vuel, I'm saying the railage inwards is the same as railage on purchases. So the reason why we said the two accounts are office refreshments and the railage inwards is because we are using what? Periodic. Under periodic, if we incurred additional expense, like in this case, railage inwards, we are allowed to show that account as a standalone account. Like as you can see here, we said railage inwards. But if it was under perpetual, like Lian said, you won't be allowed to say railage inwards. You were supposed to say what? Trading inventory. Because under perpetual, any additional cost incurred when we buy stock must be part of the cost of that stock. I don't know if you get me or not. Yes, part of the stock, yes. So, no problem. Yes, these are the two accounts involved, guys. So, but you must decide which one are you going to increase and which one are you going to decrease. So, okay, let's talk about the railage. Must I debit or must I credit? Because they are both expenses. I must debit because they were supposed to come and debit. If I debit this one, it means the other one must be. I'm just fixing the mistake. Okay. So be careful with the system. Sometimes they don't tell you, but by the look of things, you must know whether it's perpetual or periodic. You can. Next one, please. Owner took goods. Thank you very much. How much? Thank you very much for that. 60% on selling price. Selling price is how much? 1125. I think by now you know that the drawings of goods must always be at a cost. So every time when you see that the owner took goods for own use and they gave you the selling price, guys, you can't use the selling price. Always calculate the cost price for that. Okay. So in this case, They gave us a selling price of 1125. We cannot use that. We need to convert it. But be careful when you convert this selling price to. Okay. Let me repeat. According to this one, they said the owner took goods for own use, but those goods, they gave you the selling price of those goods. Remember, we did not sell to the owner. The owner took them for own use, meaning he took them at a cost. So because they gave you the selling price, we need to calculate the cost price of these goods. That's why they gave you the markup of 60%. So how much is the cost of these goods? Because they only gave us the selling price. I think you still remember how to deal with the markups. So how can we calculate the cost price of these goods? Because the selling price, let me just put it here on top here. The selling price is equal 1125. It's what they gave us as the selling price. So how can I find the cost price of these goods? I must multiply this by okay, let me explain, because I think some people are losing me here. You don't understand me, or maybe you are losing me, you can't hear me. Leon, do you want me to explain again, or is it because of the connection? Oh, it's sort of happening here. Okay, let me double check. Am I better now? Thank you very much. Okay, let me explain this first, guys. I'm saying, according to our adjustment, the owner took goods for own use, but they gave you the selling price. But you cannot use the selling price here because the owner did not buy the goods from the business. He took them, meaning he took them at a cost. So we need to use the markup given to us to calculate the cost price of these goods. Like I said here, the selling price is how much? 1125. So how can I find the cost price if the markup is 60% on selling price? Someone try, please, before I can show you. Okay, Lian, you are correct. Definitely, you cannot divide by 1.6. Why? Because the markup is not on cost. Can you see that? Only if the markup was on cost, you would divide by 1.6. So you need to multiply by what is the 0.4? Do you understand how did I get 0.4? I think 60% is the markup. So you need to say 100 minus markup. So you say 100 minus 60. You get what? 40%. Because I'm looking for the cost. Because if I can use 60%, it means I'm trying to find the markup. Are we together, guys? How much is it? 40% of 1125. Please ask questions if you're lost. 450. Are we all okay here? I don't want you to be lost. So the cost price. Sorry. sleeping on duty here. Okay. The cost price. You see? So we can only record the cost price, guys. Okay. So be careful in the exam, please, and check how is the markup. Yes, if the markup was on cost price, you should have divided by 1.6. But because the markup is on selling price, just say 100 minus 60%, you get your 40%. So now please give me the two accounts for this. Give me the first account because we've got our amount already, 450. Drawings, I agree. And purchases. Remember, we're using which system? Periodic. So that's how we say purchases. Remember, if it was under perpetual, we should have said trading inventory or trading stock. Okay. What must I do to, okay, must I debit purchases or must I credit purchases? Will the purchases increase or decrease? I must credit to show that my purchases are decreasing. And obviously, when it comes to drawings, I'm gonna perfect that, just like that. But the amount to be used is gonna be 450. Thank you very much. Next, I know, guys, how many do we still have left there? Okay. Okay, no problem. Yes, let's do this. Revealed the following on hand. The first one is trading stock. Okay. Okay, guys, let me talk about this trading inventory first. If you are using periodic, guys, and they give you stock on hand like this, trading stock, this will go to the statement of financial position. Don't worry, it's going to be part of our assets. So don't worry about the trading inventory for now. No problem, definitely. I think we can continue next time, but let me just clarify this quickly. Let's focus on the cleaning material because, as I said, the trading stock or trading inventory is on hand because we're using periodic. We don't have to worry about the shortage or not. So this trading inventory will be recorded in the statement of financial position. For now, I want us to focus on what? The cleaning material and the stationery. Please, let's try to come up with the accounts involved here. We can combine them together. Give me the account you see there. Obviously, we see the two of them. We've got the cleaning. Thank you very much. Material. We have got the other one is what you said is stationery. And together they are on hand. So what is the account which represent all the accounts if they are on hand, those accounts? What is the account that I told you about? I think, Lian, you heard it, but you just said must be something. I want the account that represents this cleaning material and stationery on hand. Thank you very much. Consumable stores on hand. Can you see now? So these accounts, those two accounts, cleaning and the stationery, they will be absorbed by what? Consumable stores on hand. So what is it to us? Remember, I said it shows our current. Remember, that can give others. I know it's time up, guys. Current asset. Debit or credit? Debit. Thank you very much. What will I do to the cleaning material? Debit or credit? Credit. Thank you. What about the stationery? Debit or credit? Thank you very much. Can you see? When you go and record in the GJ, you're going to start with what? Consumable stores on hand because it has been debited. This one first. And thereafter, you can put these ones thereafter because they've been created. But the amounts that you're going to use here are the amounts you see from what? From the information that you gave me. Are we together? Next transaction, please, or next adjustment. Are they, do we still have anything left? Okay, let's analyze is it the last one? I think so. Let's analyze the interest, guys, and then we can end our session because we need to sleep. Tomorrow, going to work. Thank you. 12% per annum, yes. Did they say any other information? Okay, on the 1st of, it was increased by 110,000. No problem. Is that all? Okay, no problem. Now we can record. Okay, now we need to check. Please give me the balance from the list of balances first, of the loan, not the interest. The loan amount from the balances. What is it? No problem. Thank you very much for that. Yes, the installments, no problem. Thank you very much for that. So meaning as from next year, we're going to start paying those installments, yes. But for now, can you please help me with the balance you found from the trial balance of the loan, not the interest? I'm looking for the loan balance. Four, 5, 7, 5, 7. This is the balance of the loan. Thank you. Okay, 4, 5, 7, 5, 7, 5. Okay, now can you see they say this loan was increased by the 1st of November? It means during the period, the loan was increased by 110. So unfortunately, we cannot calculate the interest on the whole amount. We need to know the loan that we started with first. So we need to first deduct 110,000 to check how much was the loan at the beginning. Please help me. Minus 110,000 and tell me how much is the loan at the beginning of the year. Three, 4, 7, 5, 7, 5. This is the loan at the beginning of the year. Thank you very much. So now we must start calculating the interest on the amount at the beginning first. Okay. How many percent? 12%. But we need to calculate the interest. Yes, we need to calculate the interest up to the point of increase. So we need to calculate the months from the beginning of our period to the 1st of November. We must start from 1st of May, June, July, August, September, October. We've got 6 months because we cannot count 1st of November. So we're going to say times 6 divided by 12. Are you all with me? Because we were having 3, 4, 7, 5, 7 only for 6 months. Only on the from the 1st of November, it was how much? 456. So how much is the interest here? $208,504.5. This is the interest for the first 6 months. Okay, so now we need to find the interest from the 1st of what? November. So from the 1st of November, the amount increased by what? 110. So it means now we have got 457,575 times 12% times another 6 months. How much do we have? Sorry. 2, thank you. 27454.5. This is for the second. Okay. So therefore, we're gonna take 20854.5 plus 27454.5. Please add for me. I need the total of the two. Thank you very much. 48309. This is the total interest for the year. Is the one that I need to account for. Okay, and we need to come up with the accounts for that. Please give me the two accounts for this interest. Obviously. The other account. No, I'm talking about this one that we're talking about, the mortgage loan. Remember, this interest is outstanding. So the two accounts will be interest on mortgage loan. The interest on creditors account will join this interest when we do the notes. They will be together there. But for now, I'm talking about the two accounts for this interest that we just calculated. This interest is outstanding, meaning the other account is, because we just provided it, still to be paid. And like we said, this will be our current. And obviously, it's going to be credited. Are we okay, guys? I know we are tired now. We need to sleep. Can I just say at least we got something? It's better than nothing today. What do you think, guys? Questions? Is everyone okay? But just go and try to look at them again. Thank you very much, guys, for your time. We'll talk about the extra sessions. But yeah, I'm very happy with the progress today, guys. We did this for a reason, guys. You know that we'll never regret this. This is the basic information that I needed. By the time when we go to the financial statements, you won't be surprised if you see me adding or lessing, adding or lessing. Thank you very much, guys, for your time. We'll definitely meet in the near future. Thanks, guys. Thank you very much. Sleep tight. Okay, bye-bye.